Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. A bullish harami on Friday, if only just after the previous session's second bearish black crow. Prices are still a little sluggish as they sit just underneath the significant overhead resistance from the combination of the 50% Fibonacci line of the January 21 to September 22 move, currently at 109.44, and the shallow dark blue neckline of July 17, November 18 head and shoulders pattern, also currently at 109.44. A little beyond this is the purple neckline, currently 110.19 of the January to February 21 reverse head and shoulders neckline. As I've said recently, I would continue to keep an eye overhead at the September 2024 high at 112.13. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead of that, starting with this 50% Fibonacci line, the shallow dark blue neckline. And the 50% Fibonacci line had previously capped a reactionary rise back in November last year. So far today, slowly pushing upwards from Friday's close, though still within Friday's range. Cable, aka sterling against the US dollar. A bearish matching pattern type on Friday, though it was also an indecisive spinning top pattern as well. Additionally, it was also a second bearish black crow. So we've reached the topside primary target for the breakout from the dark blue ascending wedge pattern. We now have the secondary hard to reach target X1 up at 131 even. Below we have the November 2020 low at 128.52, which acted as a support early last week, and then the flatlining gold long moving average below that, currently 127.92. As I'd said recently, I would continue to keep an eye overhead at the September 24 high at 134.34. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns, a possible annual key reversal. However, a number of significant resistances ahead of that, starting with the low of December 2020 and the high of July 2023 at 131.33 and 131.44 respectively. So far today, a lower open, but pushing up towards Friday's highs and looking like a reactionary bullish engulfing pattern right now. US dollar against the Japanese yen. A combined immediate countering bullish opening white Maribosa and bullish engulfing pattern, if only just on Friday. This after the previous session's combination of a bearish double and a bearish harami. Overall, the market continues to travel lower within three main patterns. The first is the oft-mentioned early December 24 to date rounded top pattern. We have formed the rounded top itself and started the exploitation of the downside. Primary target area was reached, but the secondary much harder to reach potential, in this case much harder to reach potential, is down in the 138.40 zone. I've taken the decision for now not to assign it as a target because after all it is so far down below the 2024 low in September and would bring up all sorts of questions if it happened. The primary one would be if we would form a very rare annual key reversal down here. In the meantime, we have the second more immediate pattern here highlighted in pink on my daily chart, an early February to date descending wedge pattern currently at 145.54 to 148.54. This pattern is the current driver lower and has helped the rounded top reach its primary target. However, on Friday we briefly pierced the upper trend line of this pattern but closed back within it, if only just. I'll continue to monitor it closely. Now, the final pattern is a big picture item. It's a bright red July 24 to January 25 bearish Andrews pitchfork. This pitchfork shows the bearish angle of attack of this market as prices head lower, and we are right now, in between the overhead upper time, currently at 152.69, and the middle time below, currently 137.40. Now, so far today, a lower open, but an immediate move higher up over the pink upper trend line and towards the overhead 50% Fibonacci line of the July 23 to July 24 move at 149.61, but seemingly not having the energy just yet to make such a move upwards count. US dollar against the CNH, the offshore Chinese yuan. A bearish engulfing pattern yesterday after the previous session's second bullish white soldier. The top side was capped by the influential dark blue upper trend line, currently at 725.58 of the January to March 24 ascending triangle pattern. Above this is the bright green upper time, currently at 726.25 of the breached, now seemingly repaired, late January 24 to late January 25, late December 24 to late January 25 bearish Andrews pitchfork, as well as the rising mauve medium moving average, currently at 727.03. The bright green bearish Andrews pitchfork is the current showrunner of the market and thus still puts at risk below the gold long moving average, currently at 722 even, the May 2020 high at 719.64, and even the bright green middle time, which is currently at 718.67. Overall, there continues to be the possibility of looking at the whole late November 2024 two-day action as a possible double top, even Adam type. On this pattern, I would watch very carefully the market's action and response on any approach to the gold long moving average below. Now, so far today, a seemingly early approach to the gold long moving average below, but also a rejection back up as well right now, though not as far as the overhead dark blue upper trendline extension, and we're looking like an indecisive doji cross right now. US dollar against the Brazilian real. A quite large bearish engulfing pattern on Friday, far more than was needed for the previous session's pattern of an indecisive doji cross, but significant for two features. The first was a piercing and closing below the bright red breach, but seemingly repaired previously May 24 today uptrend, currently at 579.11. The second was a piercing but not as yet closed below the slowly rising gold long moving average, currently 572.85. These two, the bright red uptrend and the slowly rising gold long moving average, had been guiding prices higher for 4 weeks now. Yet the top side has also been capped by the bearish pressures from the March 21 high of 588.04 and especially capped by the mid-December 24 to date dark blue downtrend, currently 581.94. Further overhead we have the declining green short medium moving average, currently at 588.83, and the very slowly rising mauve medium moving average, currently 591.31. Now looking below, we also have target X in the 563.35 zone and the harder secondary target X1 down at 541.95 on my daily chart. These are the primary and secondary targets that drop down from the large early October 24 to mid-January 25 rising expanding wedge pattern. These are still live targets. US dollar against the Mexican peso. A significant fourth bearish black crow on Friday, as it was a third consecutive close below the bright red lower bull channel line, currently 2029.17 of the very gently rising bright red early November 24 two-day bull channel. That's currently 2029.17 to 2106.77. That's becoming a rectangle top pattern. This bright red shallow bull channel come rectangle top had been the show running pattern here since last year. On Friday, the market reached down to target X at 1985, the primary target for this pattern. We still have the secondary harder to reach target X1 down at 1948.90, still open. However, Friday's action also showed off a support below the previously highlighted congestion zone between 1987.96 to 1991.31. Now prices on Friday punched down through this congestion but ended up closing right on top of it. Further down we have the April 22 low at 1971.68. That is just above the flatlining gold long moving average, currently 1968.74. Now so far today, a small, very small basing action right now on top of the congestion between 1987.96 to 1991.31.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.